Hey, this is Jack at Alpha Charts with a state of the market video. Today is October 14th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you all for watching this video. If you haven't done so, please like and subscribe on YouTube, and you may follow me on Twitter if you'd like at AlphaCharts365, presenting tons of content there all of the time. All right, let's get into the charts. So SPY this week, we have this obvious lower highs and lower lows that are in effect. Now we had a nice little snapback rally at the beginning of the week and starting on Friday and follow through on Monday. It was really, really encouraging, right? Very strong, started to reclaim moving averages right at the 200 day. Everything was lining up really, really nice. And then Thursday and Friday happened, and it really took the wind out of the sails of the rally. You see on increasing volume as things went to the downside. Really not a good look. And we still have a declining 50 day. When we go back, 50 days is right here, right? That's the 50th day. So as we come into this area right there, if price stays below, we'll continue to get a declining 50 day. If price somehow digs in, we'll call it 430, 429, whatever it may be, digs in right around here and can make a higher high to here, and then most likely that would reclaim the 50 day, we could start to see this 50 day flatten out. So that's what I'm actually watching to see. Do we get more follow through to the downside and maybe another retest of the 200 day? Or, and the VWAP, by the way, is anchored to the beginning of the year, just so you know where the yellow line is a VWAP from the beginning of the year. Or do we get rollover and continue this pattern of lower highs, lower lows, break the 200 day, and then things get really nasty? That's it, right? That's what it's all about. We don't know the answer to this yet. But underneath the declining 50 day, that's always a problem, right? Never a good thing. On the week, let's see what the week was. 0.47 up on the week. Looking at the RSP, and when I do that, let's go back into here because all my things are in here. All right, RSP on the week was 0.24, so a little bit weaker, but not crazy weak, right? Which is, I guess, a positive. Now, the equal weighted RSP is below all of its moving averages again, including the 200, which is flat, and the 50 just crossed the 200, which is never good, whether you want to call it death cross or whatever you want to call, 50 declining below the 200, never a good idea. You're probably in a downtrend when that happens, right? And a pattern of lower highs and lower lows at this point. Again, if we get a little dig in this general area, and we start to retake these moving averages, that's the positive, right? We're not seeing any indication of that yet. So RSP, again, lower highs, lower lows, not much more to say about that. Looking at the Qs, again, we have this kind of broadening formation. I mean, 335 has always been a potential out there, which is also right about where the VWAP anchored from the beginning of the year is. Also, the 200-day moving average, they're all in that area. And now, again, super excited beginning of the week, right? I mean, and it would make sense. Price got it back above the 50-day moving average and all of its shorter-term moving averages. It was always above the 200. And, looking back 50 days, was right here, right? So you're saying, okay, we're going to start to get a flattening 50 day, price got back above it, right? Things were looking really, really good. And then we got Thursday and Friday and that increase in volume on the downside. At the very least, probably 350-ish is going to get tested again, if it breaks through. I think 335 is very likely, right? I mean, it sliced through the moving averages. Like, I guess it's right at the 9-day, or I'm sorry, 23 day. It's right there, but basically sliced through the 50 day. Like, it didn't care who the 50 day was, right? So it doesn't. But I think, yeah, I think a retest of 335 is probably likely. And then again, if it can hold there and come back up around, that is the positive, right? The negative is we still have lower highs and lower lows. And this is just another lower high from here. That's all, or from here, whichever one you want to choose, this general area. It's a lower high. And so it's still in a downtrend, whether we like it or not, right? Now we come back around and we come back this way and we break this, above all the moving averages and this downtrend line. Hey, you know what? Let's get bullish. But it's hard to be bullish when it looks like that. Looking at the week, up 0.15. So basically even on the week. Equal weights was down 0.07, roughly the same, close enough. And you see on the equal weights, still lower highs and lower lows. Again, it did hold the 200-day, held this, 73-ish area, which we've talked about the 73-ish area being very, very important on the equal weights, and still is. It still is. But again, lower highs, lower lows, and we'll see if this little falling wedge type pattern is a big deal or not. It doesn't have to be, right? But 73 is a big deal. So price has to keep above 73 for the bull thesis to be intact, 100%, right? Looking at let's look at mid caps. Mid caps, oof. So this is what I was thinking back here, right? This is a consolidation within a downtrend. It should have broken lower. It broke higher. So one of the things that really got me a little bit more bullish at the beginning of the week was this pattern right here on mid caps. And then we got followed through to the upside. And then we have a little kind of stally type day right there. And then Thursday and Friday happened, right? And basically gave it all back. And so this, which was, again, very nice to me, Tuesday, followed through to the upside, loved it, even though it was on declining volume. It did. The more important thing was that it didn't break down. And then what do we got? We get the breakdown. Also about to get this cross in the mid caps on the 50-day over the 200-day, probably this week. It's never a good thing, right? It's coming. So nothing good really happening in the mid-cap world on the week. It was down 0.52 and just really an ugly bar candle right there. Let's go to small caps. And again, down 1.56 on the week. Let's go to the daily. You see what was weakest, right? That was easy, right? So SPY held up and small caps didn't. So, I've talked about small caps being the weakest. We've talked about the structure of a very big topping pattern. We don't know if it's going to break or not, but 162 is a big deal. And when we go back, 162-ish, 170, this area in general has been a big deal for a very long time. It continues to be a big deal. We already have the 50 crossing over the 200. We have this, beautiful downtrend, right? Lower highs, lower lows, very defined. Again, right into potential support. Maybe this is some kind of falling wedge. Maybe it's not. Maybe it just needs more time to build itself out and create some sort of bottom. Every time we've kind of come down here, sometimes you get this little bounce, sometimes it retests. You can see it, sometimes it comes down here, rebounds, retests, before it moves higher. But the support area has held every time so far in recent, up through, July, right? Or last year. So we'll see if it continues to hold or not. This 160 to 165 area, super important for the market. Again, nothing here says that the bulls aren't controlled though. Just because it was support back here doesn't mean it's support over here. Again, we'll find out pretty soon, right? All right. So as far as indexes go, major disappointment, I think, this week. Even if the SPY and Qs were slightly positive, I think there was a major disappointment that there was not, that it gave it back so easily, right? That's what I think it is. It gave back the gains made so easily. It tells you about institutional involvement and support. So not good, not good. Let's look at the ETFs now. We're going to start with XLF. XLF, I talked about this being maybe a bear flag, and again, I don't know if it's a bear flag or not, right? It may be. I tell you one thing: big banks reported on Friday, and they gapped up and they gave it all back, right? And this right here looks more like distribution than it does look like accumulation, in my opinion. This type of candles. So, don't know. 50 crossing the 200 day again. Not a good look. Not a good look. And a break here, I think we retest this $30 level, right? We're going from 35 to 32. Then we're going to go from 33 to 30, right? That just makes sense to me to finish off this pattern. And then what, right? And then what? So let's go to a weekly chart. And financials were up 0.5%, but on the week, this is why $30 is important, right? This is why it was important. Here's $30 right there, and it was a big deal all the way back to the great financial crisis, right? Or whatever you want to call it. Very big deal. So coming back here to daily chart. We'll see what happens. But again, not a good look, right? That's what we're playing. We're playing the good look, not a good look game right now. Let's look into semiconductors, equal weighted. Talk about not a good look. That's a daily candle right there on the equal weighted semiconductors. Holy crap. I haven't looked at this. This literally is the first time I'm looking at these charts. All right. Not a good look. Can we say not a good look? Lower highs, lower lows, breakdown. Going to get the 50 crossing the 200. Not a good look. Let's look at the cap weighted, right? This is, the NVIDIA game, right? And Broadcom. Down 2.5%. Again, had a double bottom that was trying to carve out, right? I even drew it in there because up until even through Thursday, things were looking okay. Hit the downtrend line, not a good look. I mean, down 2.5%. There's no reason to be long semiconductors until it breaks its downtrend line. You can make a higher high. And that's ugly. And you see in the equal weighted how bad it was. But it was across the board. Let's go into ITB. Home construction. Living below the 200-day moving average, right? Thursday and Friday could not retake it. Not a good look. I mean, you see distribution all in here as well. This is not like a thin ETF, right? Some of these ETFs that are like, equal weighted or whatever are thinner. ITB is not a thin ETF. So volume matters a little bit more when they're not thin. And not a good look, living below the 200-day. It's very hard for me to say anything else, right? Let's do XHB. This one is not below the 200-day. Again, this is what made me excited. This type of look when things that should have broken down but didn't, and then this takes this wind out of your sails, right? Again, not a thin ETF. And it is, again, it's going to be challenging the 200-day, it looks like, pretty quickly. And, I would tell you, going back to ITB, which is a pure home construction ETF, maybe there's something that's brewing in the housing market. Well, obviously there's something brewing in the housing market, but maybe it's starting to come to a head, right? If we're seeing this type of action, which we have not seen, right? When's the last time we saw? I mean, it was literally. Sometimes this data shows that gap in there, which I get a smoother look to it. We haven't seen this since 2021, 2022, right? That's the last time we saw this type of look, and it was pretty severe. It went from $83 down to $45, got cut in half. I'm not saying that's what's going to happen this time, but not a good look. Let's finish this off and go to transports. We'll start with XTN. Living below the 200-day. Here comes a 50-day with big U-turn, right? Big U-turn. Again, not a good look. As it was breaking out, super excited. We talked about this being maybe a rising wedge, and it fell all the way back down. Can't be a good look. And then let's go transports IYT. This is more cap weighted. Again, living below the 200-day. Not a good look. So looking at the important ETFs for the economy, everything is screaming no danger, caution. That's it. Let's go into the internals. Go to trading view. By the way, this was deep view. I'm going to go trading view because they have the internals I want to use. VIX almost back up to 20-ish, which is not a very high VIX. I mean, we've lived here normally for a lot. I guess the difference here is that the uptrend that's starting to come now. To me, it's more important up here as a signal. All this means that volatility is increasing. The signal would be up in this above 27 and really even above 31, 31.50-ish. So we're not quite there for signaling yet, but this is where my signal would be. Looking at credit spreads. And again, not screaming higher, but looks like it's going to be at least heading to the top end of its range. And a breakout here, again, going to a weekly chart. Again, nothing happens quickly on a weekly chart, right? But you can see how we had uptrend, consolidation, uptrend, uptrend, consolidation, uptrend, uptrend, consolidation, uptrend, uptrend, consolidation. I mean, if history, which is limited, right? You know, we're going back to 2008. What should we do here? We should break out, and that should be hopefully the end of the cycle, right? When things look the worst, we get this big up. That's what it is. Remember, this was 2008. This right here was 2015. Not a fun time. Here's COVID. And now we have this, whatever this is. Again, this was the end of the cycle, was these ups. And sometimes they're more gradual. Sometimes they're more acute, is what it is. So that's what we're watching there. Go back to the daily. Let's look at breadth MMFI. This is a percent of stocks above the 50-day average, down to 23%. Again, weak breadth, not extreme in my book, because we did have that little snapback right there. You can see the snapback in the breadth index right there, which was encouraging. Now, if we make a higher low here and then things turn around, hey, that's good. Bullish. Let's go. But it has to prove itself first. Anything below 10%, you know, 12%, 10%, you know, there's COVID right there. You know, you see 2018 had a spike, and then what do we get? We have a nice big snapback. Just going back, you can see here's 2015. You know, 2015 had some snapbacks, but these are pretty good signals. When they get extreme, we're not quite there yet. And then looking at the put call ratio. So we've had a couple, forays into this area. I think that we're in a situation similar to maybe 2022, where you see we've had multiples, ever deeper movements in there, right? And these were pretty close together. 1216. Actually, I have the dates right there, right? 1216, 1221, 1228. So they're about a week apart, right? 927, 10.4. We'll see if next week we get another big spike and it looks like this. Maybe that'll be the beginning of the end. We'll see. Don't know for that time period, right? But again, I think this is what I'm kind of looking for. We'll see if it happens. Again, a very deep one would be phenomenal. Yeah, so as far as the internals go, I think that things are slow motion, because remember, internals are more measuring sentiment type stuff, right? VIX is more of to me, more of a sentiment indicator. Put call ratio, sentiment indicator. The bonds, that's a big deal, right? That's but it's also sentiment in a lot of ways. Are we more bullish? Are we more bearish? Are we going into government bonds or high yield bonds, right? That's all. Breath is kind of, it is what it is. But again, along the way, that's a slower reaction, right? Going back to deep view here, I think that this 200 days is it's a spot, right? Maybe we come back down, maybe we test it again, 421-ish, 420-ish, the VWAP. Break below that, things obviously are going to be getting much, much worse. And right now, looking at all this, there's nothing to say that nothing says that things are recovering. If anything, choppy would be the best case scenario at this point. So it could carve out a bottom. That's how bottoms are carved, right? Usually by choppy action. So choppy at best, but maybe even potentially bearish at worst. So I'm back to straight up caution. I'm 100% cash right now. I don't want to play around in this market, right? I'm managing risk, and and that's it. That's it, right? Let's see how things develop. First one in the pool doesn't get any prizes, right? So there you go. All right, y'all have a great day. Thank you all very much. If you haven't followed me on Twitter at AlphaCharts365, check out my YouTube. Subscribe to it. It helps me out, and I appreciate that. Hope you all have a great day. Bye.